I'm sure many of you have heard the term dollar cost averaging or DCA before. It's been all over the media lately. It is essentially an investment strategy that allows you to invest consistently into the markets without timing the market.
I'll tell you.
But how do you actually go about doing it? Well, in this video, I'll be sharing with you step by step how to start dollar cost averaging in crypto. In this video, I will go through the 5 steps that I took when starting out as a beginner, so that you too can follow along and learn. Alright, so first let's start off with some motivation. Want to start investing but not sure where to begin? Try DCA. It's easier than you think. Alright, so now that we got that out of the way, let's get right into it. So the first step is to decide on your budget. Now, let me preface this by saying that you should only invest money that you are comfortable with and, in need for at least the next 5 years. This means you should ideally already have an emergency fund stored up first before investing. With that being said, once you have decided how much you would like to invest, it's time to figure out how much to allocate and when. For example, if you want to invest $50 every week into Bitcoin, then you would want to set aside $50 from each paycheck and wait until the next paycheck to invest again. Or another way of doing it could be to just invest $50 once per month. Whatever you choose is completely fine, as long as it works for you. So once you have figured out your budget, the next step is to pick your coin. There are thousands of cryptocurrencies out there these days, and the choice can be overwhelming if you are a beginner. That's why I recommend sticking to the big 2, BTC and E. If you are feeling a little more adventurous, you could try looking into other blue chip coins such as XRP or Solana. But I would keep it to just 3 coins max for now. Next, choose your exchange or wallet. Whichever platform you choose to buy your crypto on, make sure it's secure and reputable. A few good options for exchanges include Coinbase, Binance, Gemini, and Crypto.com. As for wallets, you can never go wrong with either Ledger or Trezor. Now, if you're watching this video sometime in the future, I may have changed my mind on this one. I highly recommend using a hardware wallet such as Ledger or Trezor to store your cryptocurrency long term. Right, so now that you have decided on your budget, coins to buy and where to buy them, it's now time to place your orders. This is also known as automating your buys. Let us use Coinbase as an example because I personally use them and they are quite straightforward to use. First, log in and navigate to the home page. Then click on Trade and select your preferred coin. From there, click on Trade Now and enter in your order details. Here you can either choose to use limit orders or market orders. Limit orders allow you to purchase your coin at a predetermined price. However, beginners may have a hard time figuring out what a fair price is, and therefore may miss out on buying the coin at a lower price. Market orders, on the other hand, allow you to purchase your coin at the current market price. Therefore, this method is usually favored by beginners. Now, depending on the platform you are using, the terminology may differ slightly. For example, on Gemini, market orders are called instant buys. Once you have filled out your order details, click on Review Order and Submit. You're now all set up and ready to go. Your account will automatically deduct the amount of money you set aside for buying cryptocurrency and convert it into the cryptocurrency of your choice. If you wish to do it manually, you can simply repeat the process whenever you feel like. The 5th and final step is to track your portfolio and stick to your plan. In the beginning, you will most likely experience extreme emotions such as greed, fear, and anxiety. Greed, because you want your investments to increase in value as fast as possible. Fear, because you are concerned about making the right decision, and anxiety, due to the volatility of the cryptocurrency market. These feelings are completely normal, and everyone experiences them. The key is to ignore these feelings and stick to your plan. Do not sell when the price drops because you are fearful, and do not buy more when the price rises because you are greedy. If you are truly confident in your investment thesis, then you should stay the course and stick to your original plan. One way to help with this is by tracking your portfolio regularly. By doing this, you are able to see the bigger picture and understand that dips in the market are normal and should not be worried about. Alright, now that we have covered the 5 steps to getting started with DCA, let's take a look at some common mistakes beginners make when trying to DCA. Mistake No. 1. Not having a set amount to spend. Before you even think about investing in cryptocurrency, you need to have a set amount of money that you are willing to spend. Do not fall into the trap of chasing returns. This is one of the biggest mistakes you can make. As a beginner, Your goal should be to learn as much as possible and gain experience in the market. Not everything you read online is true, and sometimes people who share their success stories online are just trying to scam you. You need to educate yourself and understand the risks involved before jumping in headfirst. Chasing returns will only lead to more losses in the long run. Remember, it's not about how much you make, it's about how much you keep. Mistake no. 2. Panicking and selling. One of the hardest things about investing is learning how to control your emotions. When you invest in cryptocurrency, you are taking on a lot of risk. The price can go up or down significantly in a very short period of time. This means that at some point you may lose money on your investment. When this happens, it's important not to panic and sell. If you bought high and the price starts to drop, resist the urge to sell. Just hold on and wait for the price to recover. If you don't do this, you will end up locking in your losses and possibly missing out on future gains. Trust the plan and stick to it, no matter what happens. Alright, so now that we have talked about some common mistakes to avoid, let's wrap up this video. If you enjoyed the video, please leave a like and subscribe. We would love to have you in our community. As a beginner investor myself, I wanted to create a roadmap for those who are just starting out. Check out the links below for more resources. Thank you all for watching, and until next time, take care.